Did you know that if you're trying to buy a house using an FHA mortgage, that you can use a gift from somebody else to pay for the closing costs and down payment of that house? And that's what we're talking about today. Uh, we're going to review the gift funds and gift of equity guidelines if you're using an FHA loan. Now, we've already done videos on conventional Fannie Mae guidelines, conventional Freddie Mac guidelines. We also have separate videos if you're a veteran using a VA loan, or if you're trying to buy a USDA loan in a USDA eligible area. So the guidelines are a little bit different. Some things are the same, but the guidelines are a little bit different depending on what type of loan you're using. So I'm doing this for two reasons. The first reason is to let you know that depending on what program you're using, the underwriting guidelines could be different. So if you have a loan officer that's telling you one thing and I'm telling you something different, they may only know the guidelines for one program. And I'm telling you, they're a little bit different whether you're using Fannie Mae or Freddie Mac conventional, FHA, government, VA, or USDA. These guidelines are a little bit different. So let's start with what are gift funds. So gift funds are non-borrower funds, so it's not coming from you, that can be given to you. It can be used for the down payment or the closing costs on your new home purchase. Now, who can give you a gift if you're using an FHA loan? A family member can give you a gift, and we're going to define what a family member is later. The FHA definition of a family member is different from the definition of a family member for Fannie Mae or Freddie Mac. FHA is actually a little bit more flexible. They let you do more relatives than just your immediate blood relatives through blood or marriage. You can get a gift from an employer or a labor union, and that is if they have a program. So your boss can't just write you a check as an eligible donor source. But if your employer has a down payment or closing cost assistance program in the employee manual, and if it's available to all employees, then you can use that money from an employer down payment program or housing assistance program. You can also get a gift from a close friend with a clear interest. And we'll go through that a little bit. You can get it from a charitable organization. You can get it from a government or public down payment assistance program that are usually available to low to moderate income or first-time home buyers. So FHA is much more flexible. If you've already watched the conventional videos for Fannie Mae and Freddie Mac, they are not nearly as flexible with who can give you a gift as FHA is. So let's talk about what a family member is, because this is a really good example. Now, a family member is defined as follows, regardless. So this is from the actual FHA guidelines. So a family member is defined as follows, regardless of actual or perceived sexual orientation, gender identity, or legal marital status. Well, there's a guideline for the days for today's society for you. They didn't used to have these definitions, but now we have to. But FHA, good on them. They're going out there. These are timely and relevant topics in our society today, and FHA is addressing them, and I love that. A family member can also be a child, a foster parent, a grandparent, a spouse, or a domestic partner, a legally adopted child, or a child placed for adoption by a government agency. This is also very different. So if you have a child living with you that that was placed there by an adoption agency, and they want to gift you the money to buy a home, like they have a savings account and they want to gift you money, that's allowed in FHA. It's not going to be allowed on Fannie Mae or Freddie Mac conventional, but it is allowed on FHA. Further defined family member is aunt or uncle, a brother, a stepsister, a sister, a stepsister, a son, a daughter, a father, a mother, a brother, or oh, no, that's what I meant. A son-in-law, daughter-in-law, mother-in-law, father-in-law, brother-in-law, or sister-in-law are all eligible donation sources with an FHA mortgage. So the FHA gift funds guidelines can be used on a primary residence of 1 to 4 units only. The funds can be used as reserves. Are okay if you have an automated underwriting approval. So you can use gift funds for down payment. You can use gift funds for closing costs. Sometimes reserves are required, and what reserves are, a common example of reserves, there typically are not reserves required with an FHA loan buying a single family house, just one house, one family. But once you start buying 2 units, like a duplex, then maybe you need 2 months worth of reserves in order to qualify for that. So that could be 2 months worth of payments, principal, interest, taxes, and insurance. 2 months worth of payments have to be in your bank account after the down payment and closing costs are paid. Those are reserves. Now, FHA allows you to use a gift funds as reserves. Okay. You can't do that with conventional, but you can do that with FHA. So again, all these guidelines are a little bit different. Now, if you get an automated underwriting approval, your gift funds can be used as reserves. But if you're doing an FHA manually underwritten loan, you cannot use gift funds for reserves. You can use it for down payment or closing costs, but not for reserves. Also, cash on hand is not a source of a gift. So cash on hand means that you just have cash money laying around somewhere. It's not in a bank or a savings or a financial institution that you can create a paper trail by getting that money out. So that's cash on hand. Cash on hand is cookie jar, mattress money. Somebody hands you a wad of bills. You can't use that money because it can't be sourced. It can't be traced. The documentation needed is the same documentation that all gift letters require. You need a letter that clearly states the donor's name, the address, their phone number, their relationship to you, the dollar amount of the gift that they're giving you, and a statement that says there's no expectation of repayment of this money that I'm giving, that I'm gifting to you, the borrower. You need to document where the funds have come from. So if the person donating the money to you or gifting the money to you, if they write you a check, you're going to need a paper trail. They need a copy of the check, a copy of the deposit of the money. You might need the bank statement showing that they had the money in their account to give you the check. You have to show deposit slips of it going into your account. If they're withdrawing the money from their account, you need a copy of the withdrawal paperwork from their bank showing the exact amount being deposited into your bank. If they write a check or send the money directly to the closing agent, a settlement or the closing agent or the settlement agent, so that's your real estate attorney if you're in a what they call a wet state, which is use attorneys to close, or if you're in an escrow state, again, attorneys or escrows, it's just a third party that manages all the money during the transaction and then distributes the money to who needs it. So if your donor sent that money directly to the company that's managing that money, you can get a receipt from that company. The best and easiest way to transfer gift funds is always electronic funds transfer. That way you don't need copies of checks and deposit slips and withdrawal slips. So in almost all cases, you want to have the donor wire the money directly from their account to the escrow company or to the real estate attorney. Now, if for some reason you are using an FHA loan and your donor doesn't meet one of these guidelines, whether maybe there's so many reasons why it could be. There is a workaround for all gifts and all gift funds. If somebody gives you money and you deposit that into your bank account and that balance of that deposit shows up on two bank statements, that is considered your money that is sourced and seasoned. Sourced and seasoned means that it's your money. It's no longer a gift. We don't need any paper trails. We don't need to prove where the money came from. If the deposit shows up on one of those statements, you have to show where the money came from. If it's just the balance on two bank statements, that means that that's your money sourced and seasoned. All right, gift of equity. So a gift of equity is basically equity in the home that's gifted to you, the buyer of the home, in the form of down payment on the purchase. Now, this is usually a parent or a relative. A common example is you're buying a home from your parents. So here's sort of an example. Let's say the property, your parents' home is worth $400,000, but they're willing to sell it to you for $300,000. So in a way, they're already giving you $100,000 worth of equity because they're only selling the property for $300,000. But you still have a $300,000 purchase price that you have to come up with down payment and closing costs for. Well, maybe on this home, your parents only owe $200,000. So they owe $200,000. They're selling it to you for $300,000. And they decide they're going to give you $50,000 of that equity from the $300,000 purchase. They want to give you $50,000 to cover your down payment and closing costs. They can 100% do that. Now you only have a $250,000 loan on a $300,000 purchase, and the equity in that property was used to cover your down payment and your closing costs. Now, who is eligible? A gift of equity can only come from a family member. That means that you can only accept a gift of equity if the donor is a family member. And then we go back to what is the definition of a family member. And the definition of a family member with FHA is very broad. If they have any interest or if they're related to you, blood or marriage, several degrees removed. I don't know how you say that, but like a cousin or a relative of your blood relative, FHA is pretty flexible, but the gift of equity can only be a family member. Gift of equity guidelines. You can only do 85% loan to value, which means that there has to be a 15% gift of equity. You can only do a maximum of 80% loan to value unless the person selling the home, whether you've rented the home for 6 months and you can document that, or if the family member currently lives in the property as their primary residence. So if they don't live in the home as the primary residence, and if you've never rented that home, then the maximum loan to value is 85%, which means that part of that gift of equity has to be at least 15% of that purchase price. But if they live in the home currently, or if you've rented the home from them for the last 6 months and you can prove that with canceled checks, then you can use a regular FHA loan with 3.5% down payment. That's what that means. Gift of equity letter, the same as all other gift of equity letters. You need the donor's name, address, telephone number, the relationship to the borrower, the dollar amount of the gift, and the statement of no repayment. Now, FHA did not specifically say that you need the settlement statement, but you're going to have the same situation. The underwriter is going to want to know where the money is coming from and show that the donor has the equity, the proceeds from the sale to give to you. So expect to have to show a settlement statement to the underwriter to show where the money is coming from. All right, folks, that is a overview of gift funds and gift of equity guidelines if you are using an FHA mortgage to purchase a home. If you have any questions, we can help. You can go to findmywayhome.com, where we are your first choice for a second opinion. Findmywayhome.com has been a website that educates and empowers consumers. That website has been around for over 15 years. I actually started that website when the mortgage industry collapsed in 2008 to help educate and empower consumers to make more informed decisions. So if you're watching this on YouTube, you can ask questions below. If you're seeing this on the website, you can either search for a mortgage expert. On findmywayhome.com is a directory of professional loan officers that I know, like, and trust that are on there that are willing to help answer your questions. You can go to the state directory at findmywayhome.com, scroll to the bottom, click your state, and you can see who we have as part of our network that is in your state. Then you can reach out to them directly and ask your questions. You can ask your questions in the comment section here or on the website, and we will answer any questions. If you're a subscriber to our YouTube channel, if you're not, please subscribe. If you are, you'll get a notification that we'll do a live question and answer every Wednesdays. All of this information, links are in the details. I want to thank you so much. First of all, congratulations on doing your homework. I hope this is helpful. Again, we did videos on Fannie Mae conventional, Freddie Mac conventional. This is FHA. We have VA if you served in the armed forces, or USDA if you're buying in a more rural area and you're looking for 100% financing with no down payment. So thanks for watching. I hope this was helpful. Please reach out if you have any questions. That's what we're here for. If you're feeling lost or you're having a hard time getting the answers that you need, that's why we're here. We are going to help you find your way home. Thank you so much for watching. We'll see you next time.